Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Hey everybody, welcome back to the very first October stream. And you can see we are all themed up in here thanks to our wonderful producers and thanks to you guys for supporting us. The only way we do this, the only way we do these shows and financially can do them is thanks to our sponsors, as you just saw, FX2, 8cap, and of course you guys as viewers being here allows us to budget for an awesome team that makes such great shows. So shout out to the producers. If we could in the chat, guys, let them know, you know, I don't know, say something like that was awesome. If you liked the intro, they worked really hard on getting that all set up. James and Chandler did a great job with that. Guys, we are now into the news right as we start out the show. 10 a.m. here, we had ISM manufacturing numbers as well as ISM manufacturing prices. Now, what you've got here is you've got a hotter than expected number, and this just adds sugar to this already very sweet upside to the dollar. Take a look at this dollar index, guys. The dollar index is just on a roaring uptrend. And if you've been watching the show for a while, if you're a regular viewer, if you're someone who pays close attention to what we talk about, you know this is not a surprise. We have been trading this trend. We have been fundamentally and technically bullish on the dollar in the last few weeks. And it looks like the dollar is set to potentially put in its 13th week in a row, potentially bullish. Now, again, we are just early on in the week. We just got started, but this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I'm sorry, maybe it's 12. Maybe I counted that wrong. You get the point. This is an incredibly bullish dollar, and it does not seem to want to quit. The hard part for a lot of traders is that it's very hard for newer traders to accept that a market can move in one direction a lot longer than people think. A lot of traders, they approach the markets thinking, well, this market's gone up, it's time to come down. It's just not always the case. And that one time where it does keep going, that's what wipes out a lot of traders who are trading over leverage with no stop loss, that sort of thing. Let's talk about this market, guys. What is up? What is going on? What is poised to move higher and lower in October? I've got so much to talk about with you guys. Today is going to be a long stream. It is our first October themed stream. And again, the quality of the video is low. Is anybody else experiencing low video quality, or is that just Sia Trades? Let me know in the chat, guys, if everything is okay. It looks okay on my end, but please let me know. Hope the intro stays. Don't worry. We've got that intro running the whole month. We've got more fun stuff coming for you in the month of October, and we'll keep you up to date on that. We've got lots of cool giveaways and prizes. This is possibly some of the most fun times of the year for us here at A1 Trading. We love theming the streams, and you could just imagine we have tons of plans to keep it fun. Low video, interesting. Clearly, okay. Can anybody see me clearly? If anybody can see me clearly, then it is probably not on my end. But please just let me know. Ivan says, when am I coming on? Ivan, you can come on in, let's say you want to do 10:30. The reason we push back the stream is because we have some stuff we want to do later on in the stream. So anyways, let's get into some charts, guys. Ivan, just speak with Chandler. I think he should be able to coordinate you coming on. Okay, cool. Your screen is blurred. Can't read graph clearly. All clear over here. Okay, if one person's clear, then that's all good. Because if one person's clear, then it's probably not my end. Yeah, you're okay. Okay, some people are saying it looks clear. For the people who are having issues, I would imagine maybe just make sure your internet is all right. And yeah, let's keep going. Anyways, dollar index, guys, big resistance point here as we come into the ISM manufacturing data, which did look relatively strong for the dollar. This is a dollar trend that has already been playing out. So it needs, to continue uptrends like this, you need strong data points, you need strong conviction. And so, we have Jerome Powell speaking in about an hour. That should be interesting to see how that potentially moves markets. And also, not to mention, you've got NFP on the horizon, guys. On Friday, the dollar index will be very volatile. So will gold, indices, oil, all of it will be very volatile. Speaking of volatile, we've got to talk about this gold move. Holy goodness, guys. Gold is down to 1832 an ounce. This is wild to see playing out. Here's a look at the daily chart. And today is a day, October volatility seems to come back strong. And yeah, with this dollar strength that's coming in, one of the more interesting stories out there is gold weakness. Remember, guys, that the dollar strengthening puts downward pressure on the metals market, etc., because a stronger dollar makes gold harder to purchase for foreign investors, right? Because if the dollar is stronger, that means their currency goes less distance with buying gold. So the demand might dry up. And also, there's several factors at play here. You also have China. China's slowdown has been a contributing factor to gold weakness for weeks now, but does not seem to want to stop. But then you have China, right? You also have the Fed, right? The Fed higher for longer narrative is going to continue to be a pressure on gold until something changes. The point is, you have China slowdown, the Federal Reserve, that DXY chart that I showed you, that dollar index, yields going up, make bonds as an alternative investment to gold more attractive. As right now with a bond, you're getting, the Treasury is offering 5% on a 2-year. The point is, guys, gold has a lot of fundamental factors that do not look good for it right now. And we've been saying this. So people say, oh, well, like, obviously it doesn't look good. We've been bearish on gold for months now. Frank and I both, I've taken some shorts that worked out. Frank shorted most of this move to the downside. He called out that group trade. I'll show you that right now, just to show you I'm not just saying that. Frank has been, if you're a regular viewer on the show, he's been short gold. He rode a lot of that move to the downside, right? Here was his gold short. He shorted from 1925 and shared that signal within the Discord group. And we had a massive slide. He took, I think he's out of the trade. He took 5,800 pips. If you guys watch the stream regularly, you know who Frank is. If you don't, Frank is my trading partner. He also is one of the developers here at A1 Trading that works on our software tools like the EDGEFINDER, etc. By the way, guys, while we are at this, let me make mention to something that's kind of cool. If you guys aren't in our Discord channel, join it. First of all, we'll drop the link in the chat. But right now, we've got an extra special cool thing. We are handing out a gold VIP membership. This is an unlimited access to all of the trade alerts, to our chat rooms, to our educational portal, all of it totally for free. If you click this link and join this link, you're getting a chance to win. One person who joins our Discord channel or who is in our Discord channel already will be getting a free gold membership this month. This is an October giveaway we're doing. We've got a couple of these, but if you're here with me right now, there's 371 of you guys watching right now on the two channels. Click this link in the chat right now. Join our free to join Discord. There's some great value in there anyways, so you're getting something for free anyways. But just by joining, you'll also get a chance to win a gold VIP membership at the end of the month. We're going to be announcing plenty of winners of prizes. Again, it's a fun month of the year. So nice spooky decor, bro. Thank you. The producers have done a wonderful job theming the stream this month. And it's fun. It's just fun. It's always enjoyable to have a fresh theme and fresh look to the streams. So anyways, Like I said, join the Discord. It's free to join. And if you do want to, by the way, if you do want to just get a membership, if you're interested in that, we'll also drop one more link in the chat. This will take you to our direct message center. When you click this link, it will take you here. So in the chat, you'll have right there, send us a direct message, click this link, and you can chat with us. It'll take you to this page. You can sign up for a VIP membership. If you want access to our trade alerts now, you can just join with that. Again, Frank caught a massive short on this. And I want to talk a little bit about where we're at with gold now. So looking at gold's price, the question is this thing a buy or is this thing a sell? At the current levels, there's not anything for me to do. However, if price does retrace to the 38.2 or the 50%, this general zone, in my view and in my opinion, is kind of a sell zone. That is the worst S we ever saw. Hold on. Sell zone, in my opinion. Okay, just remember when I voice things on this show, on any YouTuber's content, I don't know about other people, but for me and for our channel, our content, we're not here telling you what to do with your money. I am sharing my personal opinions, my personal biases, my analysis. This is for educational and informative purposes only, as you guys know. I'm not here telling you what to do with your money, but in my personal opinion, I like gold as a possible bearish play if we do get the retracement. Now, I might need to be patient on this because this is where patience is hard, right? You're watching gold just sell off over and over and over. And meanwhile, you're sitting there and you're like, I'm just missing the move. You might just miss the move sometimes. For me, I am waiting for that pullback. And if it happens, great. I like the fundamentals. There's some strong figures, Chinese slowdown, strong Federal Reserve, rising 2-year, the cousin of gold is bonds. And if bonds are looking more attractive, there's some competitive deployment of cash reserves. If you have hedge funds and they can either choose to buy gold as a physical metal, which yields nothing over time. It does not yield something. It's not a business that yields dividends or price appreciation. It is purely a metal. It is a store of wealth. And of course, gold can be a great investment. I'm not saying that it can't be, but bonds right now are offering yield, meaning you buy a bond for 5%, you're getting 5%, essentially closest to risk-free that you're going to get in the markets buying, bonds. So there is that, as that yield continues to rise, the competitive advantage for bonds grows over gold. In my view, gold is bearish until further notice. If something changes, we'll look at it a little closer. But right now, if we start to see recession fears and inflation problems persist, if you get an environment of stagflation, you will catch me looking at gold very differently. But right now, a lot of stuff bearish for gold. And until further notice, we continue to be bearish on gold. We've been bearish for weeks. So anyways, let's move on from gold. I know everybody wants to talk about it. Like I said, there's nothing for me to buy. There's nothing for me to sell on gold at current levels. Now, if you're counter trend, last thing I will say about gold, if you're counter trend on gold, if you are bullish, in my opinion, maybe you see a bounce at 1810. Is it something I'm putting my money on to bet that it's going to go higher from there? No, I am bearish fundamentally. That means I do not go against my bias, but in terms of a purely technical area of support, look left, you've got this 1810 area, which perhaps could offer some bounce point for gold. But again, like I said, probably not one that I am going to put my own money on in terms of short-term trading. Long-term investment, is there some gold opportunities? Possibly. Am I actually considering long-term investment of gold at some point? Yeah, I probably am. But for trading purposes, no. Short term, I think it could continue to go lower with that. James is going to come in, I think, in just a second here. We're gonna speak with James, see what he has for us. We'll bring him in and say hello to James. How's it going, James?
Hey, I'm good, Nick. How are you?
I'm good. What's the latest, James? It's been a chaotic start to October already. A little spooky here on the charts, if you will. What do you got for us?
Yes, so I have two things for you. We're going to run down what's going on later this week like we usually do, but you also gave me a little bit of a assignment to figure out what in the world is going on with gold. So I've been browsing some different articles, trying to find one that kind of talks about what exactly is going on with gold. And I think I've got a pretty good one and a short one too, just a quick little look at what's happening with gold here. So I can share this with you guys. Give me just 1 second here.
Okay.
So right here, I've got this article off dailyfx.com. Shout out to Nick Colley for typing this up. And it's actually, he posted this today about the latest on gold. The XAU USD slump continues as US bond yields remain elevated. So if we can run through this really quickly here. He talks about how US bond yields are up way high right now, and that is ultimately causing gold to drop potentially a little bit, but we can kind of take a look through this together. He says U.S. Treasury yields remain within touching distance of multi-year highs ahead of a speech later in the session by Fed Chair Jerome Powell. That, of course, is happening here in about 45 minutes. While financial markets are attributing a near 75% probability that the U.S. Central Bank will leave rates untouched at the November 1st meeting, further out, that probably drops to the mid 50%. Elevated U.S. bond yields are weighing heavily on gold and silver, and with yields expected to stay elevated in the near future, the going looks tough for gold, essentially saying that these U.S. Yield bonds are so high at the moment that it's having an inverse effect on gold. And he predicts that these bond yields are going to remain high, which again is going to have that inverse effect on gold potentially in the long term. A week packed full of U.S. jobs data and previously mentioned a speech by Chair Powell will decide the near-term direction of the U.S. government debt. That, of course, that Jerome Powell speaking later on today, of course, whatever he says is going to have huge impacts on the market because he ultimately dictates the direction of the U.S. dollar. So he is forecasting that U.S. bond yields are going to stay high and that gold stays low. But of course, depending on what Jerome Powell says, we could see a little bit of a break in that narrative, so to speak. Finish up right here with this little paragraph. Gold continues to print bearish candles with the precious metal losing nearly 6% of its value since September 20th. That's just a little over, that's about 2 weeks. So losing 6% of its value in about 2 weeks. The break in open below the cluster of all three simple moving averages at the start of the last week accelerated the sell-off, while prior support between 1,893 ounces and 1,885 ounces failed to stem the move lower. A prior swing to the low at 1,805 ounces is now the next level of support before the 61.8% Fibonacci retracement level at $1,794 per ounce comes into play. The CCI indicator is the oversold territory due to the recent sell-off, and this may slow further losses until readings normalize. And the other thing that I like that we have here is we can actually see the bond yield charts. This is the 2-year yield daily chart. Lots of nice green candles there, in the US 10-year as well. And you can see how high those have been trending as of late. Again, these are daily charts, so we've got a pretty long look here at how the bond yields charts have been trending. And then same here. Here is the gold price chart from earlier today, and this thing has just printed 1, 2, 3, 4, 5, 6 daily red candles in a row, and this thing has just been tanking as of late.
Yeah, no, it's James, I gotta say, I think in terms of article selection, you get a 10 out of 10 out of this. This was perfect to just kind of illustrate what is really driving the price of gold. I know so many people are probably clicking into this live stream right now, just wondering what is driving this metal down. Maybe people who are long, people who are short, whatever. There's a lot of volatility here, and I think you summed it very well going through that article with us, with the yields continuing to be high, which of course, watch the yields markets in the next about 40, 50 minutes. We've got Jerome Powell coming up. So James, thank you for that. James, what we can do is we'll come back to the Forex Factory rundown maybe tomorrow when we got a little bit more time to do so. We mentioned NFP being the big one this week, but we'll take a closer look at the economic calendar maybe tomorrow on stream. So James, thank you very much for coming on with that article. That was awesome to get that report.
Yeah, sure. Of course.
Okay. Thanks to James for that. Again, James, one of our producers and also one of our reporters here at A1 Trading. We're like a mini channel for traders. And just a quick shout, if you guys enjoy the content, if you enjoy all the work that we're doing to try and help out traders, bring some insights to traders, do us a quick favor, hit that thumbs up button. And in just a few minutes, he was here. Ivan was on. We'll bring Ivan back to comment a little bit on the markets next. But until then, we're back to the gold spot price. And I want to talk about this because, again, it's what's moving right now. One other market, quick divergence. Look at oil, guys. Gold also coming down, or oil also coming down alongside gold. This is concerning because you have oil prices dropping now, and oil prices dropping means a couple things that we could get wildly into. But Ivan is back. Let me bring him on, see what he has to say for us. We're gonna ask him if he made a move on all this the indices side of things, as we discussed in previous streams. So we'll come right back to Ivan. We're gonna just run this quick break, thanking our sponsors, then we'll bring on Ivan with some indices analysis. Check this out.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back with the one and only Ivan FX, A1 mentor, and within the Discord, he does our coaching webinars. He helps many traders both one-on-one and in a group setting. He's been trading for many years. You guys know the story. What's up, Ivan? How you doing?
Doing all right. Can't complain.
Hey, Ivan, it's October 1st. We've talked about this moment for quite some time. We've been discussing the idea of that Q4 starting up, and Q4 referring to, of course, the final 3 months here of the year as we go into oftentimes a bullish environment for the stock indices in the U.S. One thing I will say, Ivan, before I come to you on and ask you about what you've chosen to do, I will say one of the positive factors to this Q4 environment is a lot of retail-facing companies and e-commerce-based companies tend to do a lot of their revenue in this Q4, which oftentimes is reflected in the stock market. In fact, going back to 2020 until now, every year has been very strong, a strong race to the finish, if you will, of the year on the indices. October, November, December, typically strong months for the stock indices. Will the story repeat? And by the way, same thing with September, except reversed. It's been bearish every year from 2020 as the S&P 500 has struggled. So now we're entering into perhaps that seasonally stronger part of the year. Ivan, what do you think about the indices right now?
Oh, Chandler, are you showing my screen anytime soon? Because I can't wait. I've already bought S&P 500.
Okay, all right.
So, you know, yes, it's just a paper trading account because it doesn't have Blueberry doesn't have access on trading. But it's just
Oh no, is that me? Can you guys still hear me? Hopefully. Oh, I think it might be Ivan. I think you can still see me. Yep, I still have internet. Okay, we'll come right back to Ivan, guys. We're gonna give him a second to sort that out. He was probably about to tell us the secret to the market right there, guys. The internet for him, Ivan, going out as we we're just about to hear the holy grail secret to the markets, but we'll have to wait for it. He'll come back in just a second. I think he was just having some issues. Can everybody still hear me? Okay, you guys are saying we're good. Cool. Anyways, let me go on until Ivan gets back. One thing I will add, so that Q4, right? Stock indices, you guys know I love to trade them. I will look for an opportunity to be bullish on indices when it makes sense. And I'm going to give Ivan a run for his money here because I am not necessarily super bullish on the indices yet. Now, I'm not saying I'm kind of neutral to slightly defensive when it comes to indices. Again, alongside this gold move, which is seeing treasury yields go higher, that puts pressure on the indices as well. We also have a consumer that's getting beat the crap out of. Credit card spending was down massively last month. Yes, we're going into earnings season. We're going into high revenues for companies, but the consumer is weaker than it has been in years, and it's actually expected to be one of the weaker years in terms of Q4, just based on a lot of the lead indicators. Credit card spending being down, people have to pay their debt now because interest on student loans has resumed. So the consumer is less poised to deploy money into their shopping this year. Will I be doing some shopping? Yes. I think I'm going to get a new PC for the office. I'm kind of excited about that. I think I'm going to get, just because personally, when I'm doing these streams, I've got a decent computer. It's not bad by any means, but these streams are very demanding. Running TradingView, our software, the EDGEFINDER, while also doing the streaming software. I think it's time to upgrade the computer system. So I will be doing some shopping. What about you guys? Let me ask you this. Do you do a lot of shopping in these months? It typically is the highest shopping point of the year. And so, yeah, I'm just curious. Let me know what you guys think in terms of your spending habits. It's a bummer we lost Ivan. We'll get feedback if he's back anytime soon. We'll of course bring him right back in. I do want to talk indices until Ivan gets here, because actually we'll come back perhaps to indices in just a moment. Let's talk about this oil thing I was just saying. Will I buy oil again? And the answer is maybe, but I'm kind of sketched out. Because here's the thing that I don't like about oil. If you guys watched the show last week, I longed oil. I don't like saying it that way. I bought oil. I went long oil around 80. What was that? 88.5. What was it? Like 88. Yeah, 88.5. I picked it up on this low. I felt really heroic riding this move higher. But like all heroic moments, you got to have the down moments as well. And I took 2 losses before then trying to catch the right entry. So I took 2 losses on oil to be transparent, but then I bought it and rode it for a much bigger winner than my losses combined, which was awesome. I stopped out when price failed to hold this area. So I stopped out right around here. When it sold back after retesting that area again, I've stayed pretty much out of the way. I would like to see this thing kind of resume its higher highs, higher lows concept before getting back in. But I will say I'm tempted by this level again due to the previous reaction to price. So I'll watch price action on the lower time frames. If you guys are inside of the Discord, you'll get an alert if I take that trade. By the way, like I mentioned earlier, if you guys are not already in the Discord, join it. Join it just because it's great and it's valuable for free anyways, but definitely join it if you have not already, because we're giving away a gold membership at the end of this month for free to one lucky person who is in or has already joined the Discord. So if you're not in there, join the Discord. We're going to drop a link there. Yeah. And we could play a little something about our giveaway if you want. Yeah. Okay. We're waiting on to see if Ivan's going to return. The link is in the chat. Join the Discord, but check this out while we wait for Ivan to come back. Click this right now.
Before you disappear, one lucky person who joins the free Discord will win an upgrade to the VIP Discord for the rest of your mortal life. The VIP Discord features Nick and Frank's trade updates and analysis,
live webinars, chat rooms with traders from all around the world, along with so much more.
Click the link being dropped in the chat to secure your spot in the free Discord, and maybe you'll be our upgrade winner. We're dying to meet you.
Speaking of people that we're dying to meet, he's back. He's back from the dead. Speaking of spooky stuff, Ivan, where'd you go? Did your house explode or something?
No, I don't know. It's just what my internet provider calls you should not have internet right now. It drops from time to time recently. So yeah.
Gotcha. No worries. Well, we aren't sure if you're alive or dead. You might be a ghost here. So either way, Ghost of Ivan is back. Ivan, let's keep going where we left off. Indices. Mm-hmm. What are your thoughts? If you want to share your screen again, we can pull that back up.
Yeah. Okay. That was when things went south, right? So if he crashes again, then he crashes again. Okay. But yeah, I bought a bottom on paper trading, but also in my other account. And my other account, dear Nick, inspired me a bit, because you said over the weekend that having a small trading account is not possible to go to 100,000.
Oh, are you going to do it, Ivan?
I will prove you wrong, sir.
Please do it. That would be incredible if you traded it up to a massive number. I would praise you.
So I started for the 691. I just found some random money somewhere.
Okay,
so I will link it up to my FX book somewhere. But yeah, I'll try.
Cool.
I'll try the challenge.
$100 to 100K. That's easy. Anyways, so Ivan, let's get back to this indices concept, because I want to, if you'll let me, challenge you a little bit on the indices. So here's the thing. I'm kind of mixed, because on one hand, like I was mentioning, to support the idea of bullish on indices, the Q4 is really strong in terms of revenues for major companies. And that's why we generally see a lot of stock positive growth and earnings seasons coming around. So there is that possibility that is a driver to the upside for stocks. And if I'm being transparent, or I'm being honest, I hope that earnings are just great and stocks go up, because I'm positioned in stocks in my options plays and in terms of stuff as well. So the concern that I have is yields going higher. It is a continued pressure on the stock market. People are going to be increasingly, as this yield goes higher, every time this goes higher, big money looks at it and they say, well, I could stick my money for 5% passively for my clients, right? Hedge funds, big money managers, they have that option available to them. Whereas that option used to not exist. For many years, we lived in an environment where interest rates were near zero, and there was no, the bond market was like totally untouchable for really trying to get any sort of significant yield. Now, 5% is not significant, but it is increasingly an option. And then the other kind of condition there is that the consumer spending is shrinking. It's hurt. We have credit card debt is rising. We also have a consumer that has also been hurt in some ways by the resumption of student loan interest accumulating. So I'm not necessarily bearish on indices either. I don't like to short the indices, but I wonder if, despite the seasonal trends, if some of those factors could work against. We're now in an environment where QT is kind of going on. I don't know. What do you think, Ivan? Does any of that bother anything about what you think?
What are you talking about? You're talking like a bit of a retail trader here. Let me arrest you a couple of things. The rise in 10-year T-note is not a driver in itself. It's a symptom of something. It's a symptom of a sick economy. S&P 500 going down is a symptom of a sick economy. Mm-hmm. So it's just an indicator of what the market thinks the inflation is going to be, and the risk premium that's being added to US bonds, which also comes down to, is the government going to still stay and pay their bills? That is also part of the deal. So they're all wondering about what Fed is going to do next, how inflation is going to be. PCE came down, PMI came now much better than expected at 49, even though below 50. But we're coming into Christmas. We're going into Halloween. We're going into Thanksgiving. We're going into a season of spending, and I don't think that people don't have money, even though their deposits has risen. People still will spend money. So even though the outlook is, or the current situation isn't positive, it's still not completely dark. But also, if it was completely dark, S&P 500 would have been at 4,000 or 3,005. You're
right. And Ivan, I say those things not necessarily because I just starkly disagree with you. I think that like you pointed out, earnings relatively strong. And I love what you said. That was a wonderful point about the 10-year, because the yields rising does not necessarily mean stock market bear, because the yield rising is also, as you mentioned, it's a product of an economy that is relatively strong. It's not like the U.S. economy. I know obviously it's hard out there for people, but relatively speaking, the economy is pretty resilient. People still have jobs and a very, very low number of unemployed people relatively to historical times. So you have all this stuff. I think, for me, I'd like to see price action change directions a little bit, and then I might be joining you on some of those trades. But I'd like to see also this week we have NFP. That's a big indicator, really important for markets. If that job market cools down a little bit, it could be strong for stock indices as well.
So, in all of this mess, I just want to penetrate and say one thing. What should you focus on? What is the real deal? Is it close down? Is it crash? Is it recession? Is it all dooms? Or is it just trickling down to carry trades on the EDGEFINDER?
I love this page too, Ivan.
Make it simple. USD yen, New Zealand yen, pound yen, CAD yen, euro yen has all risen. I don't know how much this year, but if it's somewhere in the direction of 5 to 10%, the whole year of USD yen is 16, I think, so far. Another 45 today.
Yep.
Make trading simple. Don't fuzz about what happens there. So my point is about S&P 500, about stock market, I am equally scared. It just doesn't it doesn't move me, which unfortunately it does to people. I see people are like, but I thought, but that was not reality, was it?
Yeah.
Reality was that we still have an economy that's still functioning, and we have to go back down to the basics.
Yep, you're right. No, and that's the thing. You point out the carry trade scanner on the EDGEFINDER. I'm glad you found that page too, Ivan. I like that page a lot for simply, when I look for trades, if I can catch a swing that has a positive carry as well, it's very nice. And also, one thing to point out about the interest rate environment, we have short-term bias when it comes to memories and markets. And there have been plenty of times throughout history where yields and rates are high alongside very strong stock market growth as well. If the economy stays strong, theoretically, it can very much trickle into stock performance and company performance. So that could be a driver. So you've got USD/JPY. Do you have an idea here on the yen?
No, yeah, I do, but that kind of went out the window. Other than buying higher highs, but just to prove that from top to bottom right now, it is 17.4%, which is a worry. I do worry when we do hit 150. I do wonder even more if we hit 152. I saw your video yesterday where you're pointing out the price peak from last year, which is 151.80 something, 90 something. It's still a way up there. But as you see, the start of the week, we are already starting high. We're already higher than the opening price. So for me, it's just a continuation. How do you get in? It depends how aggressively you want to play it out. One price is of course 149.50, or just a local higher high, higher low.
I like that. I mean, the thing with the dollar yen, you mentioned the concern in the 150s from the Bank of Japan, perhaps jumping back into currency intervention. But I generally think that, they can do what they want to do, but yields bumping up against the highs and continuing to push higher is just going to be, wind in the sail for the dollar until something changes. Again, we have Jerome Powell speaking in about 20 minutes. That could likely be market moving. We have jobs numbers at the end of the week. So these things could act to change or continue the direction of the dollar. We'll have to see. We don't know ahead of time. Somebody in the chat asked about gold. We did a full kind of discussion about gold earlier in the show, but just to reiterate some of the factors here for you guys. Yields continue to be a story. And it's funny how yields work. They're like super boring. Nobody ever cares about yields until everybody cares about yields. And we're back to the highs on the 2-year or very close to it. And so that is putting a lot of pressure. What that is telling you guys, one way to read the 2-year or the 10-year is, if I could type it right, it's telling you that interest rates are likely to stay elevated for a while. This is, again, this is the marketplace for bonds, and they are saying basically bonds or yields are going to remain elevated for a period of time. But again, Ivan, you mentioned that Q4 seasonality could still be strong for stocks. I think it also actually, let's check gold, because I am curious about this. Seasonally for the euro, as we go into October, we have seasonally bearishness there, but we'll pull up gold as well, because I am curious. A lot of people probably wondering, is gold going to catch a bounce alongside that? Ivan, do you know that off the top of your head?
Say again. If gold is supposed to have a bounce now, and then fall again. But
yeah, because gold is really struggling at these levels. If you want to share your price on gold, and I've already gone through mine a couple of times, I'm curious what you have to say here.
Didn't I post like a thing yesterday? I said that where am I? That this should be a low, 1850. Not that it has to be a low, but I want it to be a low, so that we can catch a better price and then sell. Because once you get this parabolic downtrend, which can continue on forever, it's just that day it happens, it's kind of it will probably be a very aggressive move. And what do I normally talk about? Just to mention that to people, or show what I mean. Like once you start going down in these areas here, you have much deeper pullbacks, and all of a sudden oil kicks you out, and you're wondering, what did you do wrong? You sold in a very aggressive bearish market, which is unfortunate that we are in the place we are. But I definitely need a pullback or something to even consider selling it. But
yeah, no, I think that's generally consensus when you get a move like this. Is, even if you're bearish, whether you're bullish or bearish, if you're bearish on a move like this, I think you, as Ivan, you're mentioning, you've got to wait for some sign of a pullback, some sign of life. And then if you're bullish, probably got to wait to see some signs of life, some signs of reversal, because otherwise you're just buying something that is clearly just on a sell, a selling spree in the market. So it can be a very tricky trade to try and jump in front of something that's just, in this case, falling lower over and over. The one thing I mentioned earlier in the show, if you go to the weekly chart, maybe you have a little bit of a bounce here around 1815, 1810, somewhere in that zone. But as I mentioned, it's not something I'd put my money on. So in the short term, bearish is the consensus. And I think that that's the path of least resistance. I think we continue to see this thing go down. And a lot of traders are going to look at this and say, that's already down. It's got to come up now. And it does not. People have been saying that for days now, and they've just been getting destroyed by this thing continuing to go lower. So I think that, is there a bottom coming for gold? Maybe. But again, I'm not trying to predict that bottom per se. I would very much like to either see it truly reverse, or in my personal view, really just look for the pullback as a possible trend continuation play alongside what you're saying, Ivan. So yeah, it's a really tough trade to be long gold right now, in my opinion.
Yeah, also, I'm not necessarily talking long gold. I'm just talking, what do you do?
Yeah, right. Exactly.
How, what is your what setups do you want to be in? And I had a discussion with people, one guy in Discord yesterday, and the what I kind of see people lack is, well, I want people to start buying like in this area, like higher high, higher low after a reversal. Good reversal, by the way. But what I normally see, I see traders having like entries, buys when we are this late, where it's a third pullback, and we are 400 pips up or whatever. It's far away from where the bullish momentum started. So just have a very specific plan of what you want to look for. That's why I'm not even bothered about looking at gold. I would have looked at it for 2 seconds and then left, because this is bearish. Like, it's bearish and
Right.
falling, and there's nothing like that. So unless it was at 1860, then we can discuss, is that a good place to start selling? Yeah, maybe. But it's more of be very precise and have a very clear understanding of what you should do, more than just, oh, it is moving.
Right. And sadly, the average newer trader right now is getting destroyed by this gold move. And I can show you guys this if we show my screen for a second, just to pull. What's cool is we have this data on the EDGEFINDER as well. We can just go to commodities. We've added that. So gold, look at this, guys. So just to prove to you, again, when we talk about these strategies and ideas, Ivan and I, we've been doing this for a long time, and we've actually been doing these streams together for a long time as well now. And one thing that has been so consistent about retail psychology, retail trading, we don't get fancy. We don't, keep it really simple. When the market is trending lower, no matter how many times we point this out and how clearly visible it is, this is what retail traders typically do. When the market is sinking, unsinking, and sinking, like we see right now, retail traders are caught again and again in terrible positions. 74% of retail traders on the data that we have here, which is pulled from a couple different brokerages, is they're bullish. They're holding longs, they're buying, they're getting stopped out, they're getting crushed. It's a really tough time in the markets. Same with Australian dollar, etc. What we're seeing here, guys, is that when a market is trending lower like this, be so careful going against the flow of traffic. It's not, it's so interesting how the human brain works. We want to be contrarian because that feels cooler, right? If it's dropping like crazy, you're like, I got to buy it. And if it's shooting to the upside, you're like, I got to be the one to sell the top. And you look at the stats, you look at the numbers, no wonder retail traders get crushed. They're always on the wrong side of wonderful moves in the market. So again, what Ivan and I are pointing out is you can't sell it because it is probably oversold, but you also can't buy it because it can remain oversold for a suspended period of time. And that's where people lose a lot of money. Again, probably lots of people, unfortunately, who even watch our content, they're probably stuck in these trades. Every time I put out a tweet recently, every time the dollar or gold moves in one straight direction, it's probably a safe bet to say a lot of people are blowing their accounts and losing a lot of money. It's unfortunate, but it is a recurring pattern that Ivan and I have just observed in, people that we listen to, work with, and observe in our data constantly. So, yeah. Ivan, what do you think about that? Would you agree? I mean, retail sentiment is a concerning indicator a lot of times.
It annoys the living life and the soul out of me. Yeah. Show my screen as to something else. But retail sentiment is always wrong. And I had a discussion about somebody that bought gold around the price that I just mentioned a bit earlier. That was around here, around 1940. That was actually on rich sentiment. You can actually see there's a bump. There's the price starts falling. There's an increase in buying activity from retail traders.
Mm-hmm.
And I'm like, dude, you're so late that the tea is cold. Also, there's no steam left. So it's very concerning. It's very sad. It's very unfortunate. I don't know how else I can do other than just preaching, don't buy gold right now.
Yeah.
Something
At
like
the end of the day, Ivan, it's one of those things. We as content creators, yourself as a private coach for traders, at the end of the day, we can only do our very best to spread messages and to spread education. Unfortunately, the reality about this stuff is that traders, most of them, they get caught on the wrong side, they blow up their accounts and they quit trading and they just move on from that. But, hopefully if you guys are with us here, hopefully this is resonating. Hopefully some of you who may have experienced firsthand this frustration or being on the wrong side of trades like this, hopefully you're learning something and hopefully you're like taking notes, because this stuff is free game. If you're enjoying this content, do us a favor, hit that thumbs up button and subscribe. Also, I do want to say, we'll thank Ivan. We'll let him go here in just a second. But before you do, Ivan does coaching. If you're somebody who would be interested in doing one-on-one coaching, or you'd like to join group coaching, we do that within our Discord community. So here's how you can get some more information about that. If you're interested, first of all, go sub to Ivan. You can also reach out to him on his channel. You can find his contacts. You can also find him in our Discord channel. If you're in there, shoot him a message, ask him about the coaching. It might be something that is worthwhile to you. And then also, so you've got his YouTube channel. Also, if you want to just check out our Discord community where we're bringing together real traders from all over the world, we'll drop another link here in the chat where you can have a direct message conversation to someone on our staff who can set you up with a membership now. So Ivan, thank you very much for joining me. We'll have to keep in contact about your ideas here as well as my own next week, but or maybe we'll see you sooner. I don't know. We'll see what we can do to get you on the show. I know you're a busy man with a newborn and all. So thank you for coming on.
Thank you for having me.
All right. See you, Ivan. Always good to have Ivan on, guys. Again, he's a coach within our Discord community, stand-up guy, quality guy. He's a Norwegian who lives in Kenya, which is an interesting story in itself. It's very cool. I think he moved there with his wife a few years back, I think. We'll have to ask him next time, but I believe that's right. Anyways, guys, this dollar does not want to quit. 106.88 printing here. Punching on the door at 107 is the dollar index, ahead of Jerome Powell speaking in about 10 minutes. Market does not want to cool down here today. October is coming in with a bang. And as we break through this resistance point, you have to ask yourself, is this just another leg higher for the dollar index? Is the trend going to continue? Well, I can tell you one thing. Gold does not like it. Gold continues to get beat the crap out of by this dollar push. And this dollar push is largely due to yields on the rise. And that is, of course, due to interest rates, seemingly an ongoing and perpetual thing that will stick around for quite a while in markets. Interest rates is what I'm referring to. Remember, the Fed has raised interest rates by a tremendous amount in the last year or so. And that's putting pressure on gold here today. Anyways, like we said, gold ideas. Pullbacks only. No buying down here in my view. I'm not buying it. I'm not shorting it. There's nothing to do down in this level. I'm waiting carefully for a pullback. Okay. Did he say Kenya? Yes, I did. Yeah, Ivan, he lives there with his wife, I think, and Nairobi, I believe. So we'll have to ask him next time for more personal details and, where he lives and how I can go stay with him and stuff like that. So we'll ask him next time. I'm just kidding. Let's take a look at some currency pairs here for a second. Euro USD. Look at this, guys. Euro dollar tanking. Never caught my entry, unfortunately. Tanked further, though. We did have a bearish bias. We've been bearish on euro against the US dollar. We've been pretty much just bullish dollar against everything right now on the show. But notably, guys, look at this. Euro dollar sitting just around support. And again, remember what I talk about so often on these shows. Nick, it's at support. It's going to go up, right? Be so careful with that. That mindset when we're in a downtrend. Look, we talked about this. Let's go back to this. Let's consult the stats here. Euro USD, retail traders are betting on a bounce. And that is concerning because if they're betting on a bounce and we're sitting at support, and that's the retail money, that's the retail traders that average loses money. If they're all starting to bet long, is a possibility that we just break and continue, run more stops, run more, traders stuck in bad positions. That is unfortunately just the reality of this game. So for me, the euro still looks bearish. I'm not shorting it here, but I'd be interested in a break and then looking for that retest into resistance. Okay, so that's the euro. Again, guys, we're about 7 minutes out from Jerome Powell speaking, so things likely to get a little bit more volatile from here. Let me just take a second. I want to show you guys, we didn't get the chance to do this because Frank is not here today. Well, he is not in the office. He's working from home today. He had some car troubles, but I wanted to go through here for a moment. The commitment of traders data, if we can get that to load. There it is. Okay, so if you guys haven't already checked the COT data, if you're somebody who has the EDGEFINDER, remember that the data gets pulled every Friday. We get the software pulls in data every Friday so that we can look at it on the EDGEFINDER's Smart Money Tracker. So if you already have the EDGEFINDER, if you have a copy, just head over to the Smart Money Tracker. You can pull it up, take a look at it on your own time if you want some more specifics. In terms of net positioning, here's the updated list. Oil, still bullish. USD, still bullish. Gold, bullish, but shrinking. Shrinking bullish. The sellers are increasing as of the most recent filing. We'll get to that in just a moment. On the bearish side, the Australian dollar, the Japanese yen, the CAD, 10-year, and the New Zealand dollar. Okay, so what is this telling us? Well, let's go look at the most recent change to the COT data. This section of the chart, if you have your copy pulled up, this section of the chart will show us on a week-by-week basis what institutional money bought and sold in the most recent filing. Again, if you don't have access to the Smart Money Tracker, it is a software tool that we have built here at A1 Trading. We are a software company in the trading space. It's my company alongside of the YouTube channel and stuff. We run a software company, which we build tools for our own trading and for traders around the world. The Smart Money Tracker is one of our favorite features, and this tool allows us to take a look at what institutional money has been doing. To Ivan's point, I wanted to get into this with him, but I forgot to mention it. The COT data showed an increase in net long interest on the S&P 500. Very interesting as we go into seasonally some of the best time of the year. Take a look at gold with me. Look at this. Gold, bearish. This is 2 weeks of bearish, I believe. I could be wrong about that, but I think it's been 2 consecutive weeks of net bearish action from institutional traders on gold. If you guys don't have access to the EDGEFINDER and you are somebody who is a viewer of the stream, if you've been watching for a while, let me just say this really quick. Click the link in the chat. It's going to be a direct message center if you have a question about the software, or if you'd like to go ahead and get a copy for a discount while we are here live on the air, click chat now, click EDGEFINDER, 15% off, and you'll be able to qualify for that nice subscriber discount. Let them know that you would like a copy and that you're a fan of the show. And our team is instructed to help out people with extra discounts. So message in. If you have not already, click this link. It's in the chat. And you can get more information on our software. So we have the Smart Money Tracker. We also, what we do is we take it one step further. We take the data in on the EDGEFINDER, and that helps us generate biases for various, currency pairs and assets and things like that. But we take it one step further. Not only do we have the data pulled in automatically, again, this software has a vigorous algorithm that goes and pulls a bunch of data, sources it automatically, makes it easy to view for users. But the next step, the brilliance of the EDGEFINDER, is that if you're somebody who is newer to economic figures and fundamentals and the Fed and Chinese GDP and all these things, if all of that stuff, you understand that it is very important. It certainly is. There's a reason why retail traders struggle in the markets. It's because a lot of times one of the major factors of the markets is the institutional moves. It is the economic figures. The EDGEFINDER takes it one step further and automatically, with an algorithm, sorts this data and computes a general bias based on that data that we have here. So you can look at any currency pair. You can look at, any of the major currency pairs that you see on the screen. You can look at gold. You can look at indices, and you can see the EDGEFINDER's conclusion or bias based on the data that it has available to it. So we have been, for example, we've been bullish dollar consistently because the economic figures have pointed us in that direction. So things like shorting euro dollar, being bearish pound dollar, right? And then on the bullish side, USD JPY, USD CHF, these things have been generally more bullish for the EDGEFINDER. So the point is, the EDGEFINDER helps traders with economic figures and algorithmically sorts them, puts them into place, and helps generate a bias for these things. Now, it's not a magical indicator by any means, but it makes more data available to more traders who really could use some of that data. We have retail sentiment in here, commitment of traders data, all sorts of stuff. If you want a copy for a stream discount, message us right now. using this link. Like I said, I am pushing it because, again, it's an amazing product that we've worked so hard to get it out there, and I'd love to get you a copy if that's something you're interested in. Okay, guys, we are getting close here to the Federal Reserve Chair Jerome Powell making a speech. Let's see what this is all about. Due to participate in a roundtable discussion with workers, small business owners, and community leaders in New York. Audience questions expected, ... Of course, Jerome Powell is the head of the central bank in the United States, the Federal Reserve, which makes huge monetary decisions. And so anytime he speaks, it can be very market moving. So we'll stick around for a little bit, go through this, and look at this, guys. Silver's down 4% today. Gold down 1.07%. Crazy. U.S. oil also down. Pretty substantial there. Let's see. Is Jerome Powell live streaming? It'd be kind of funny if Jerome Powell had like a his own YouTube channel. Let's see if we can find him going live. I don't know if Jerome Powell is set to. I actually don't know the nature of this speech. Like, is it like a public hearing? I imagine it probably is. Yeah, I would imagine it is. I will say, guys, it is 11 o'clock, but please, you're probably not going to see immediate spikes one direction or not. This is not like a figure that comes out, which is what usually spikes the market in a single direction immediately. Speeches are more volatility sustained over a period of time. Because again, think about it. If he says something of substance, it might come out 3 minutes from now, 7 minutes from now, 10 minutes from now. It's different. Nick, can we watch Powell together? I'm looking for it. Does anybody know where we can watch that? I don't see. Is this it? I don't think this is it. No, that's not it. I'm not seeing it. If anybody has a link, shoot it over to me. Oh, I think Chandler might have found it. Possibly. We might have it here just in a second, guys. Producers are working their magic. Possibly. We'll see. All right, guys, we'll keep an eye on gold, keep an eye on the dollar. Indices also will likely be impacted. Look at the NAS is up. S&P pretty flat on the day. Haven't started yet. Okay. So in terms of other setups that we have been talking about, for me with the indices, I'm still a little bit sketchy. I will say seasonality did flip on the indices, right? Bullish during, of course, the month of October, November, and December. Okay, I think we have speech starting. Maybe we can flip it over and watch for a little bit whenever Chandler's ready for us. Oh, okay. There he is. JP on the screen. I don't think we can hear it, Chandler. If there is sound, I can't tell. Oh, let's see. No sound yet. Okay. Just wait a second, guys. We're waiting for sound as well. I don't think we can hear them. Again, guys, we are waiting for sound. We can't hear them. What do you guys think the H in Jerome H. Powell stands for? Wrong answers only. Hawkish. Producer with the hawkish. Oh, weird. They're speaking, but we can't hear it yet. Oh, I hear something now. Weird. Ooh. Lee says H for Halloween. Jerome H. Jerome Halloween Powell. Very weird. I wonder. I wonder if there's any other streams available, Chandler. That might be. Look. So weird. CNBC. Oh, gotcha. Yeah, so CNBC must be having some issues. That would actually be so terrible if like the person whose job today was like, go set up and, you know, live stream the event there. If they like forgot their, like they didn't plug the mic in or something. It's bad on CNBC's end. Okay. I'm watching their stream on my phone and it's bad too. Dang. That's a bummer. Well, very interesting. Look at that. Silver continues to push lower. Dollar staying strong. You had one job. Yeah. Somebody getting fired. Yeah. I don't know. Maybe that's tough. Because I feel like wouldn't somebody be calling the live stream guy like over and over being like, hey, your sound's not on. Nobody can hear the stream. I don't know, guys. Maybe it's a conspiracy. We could come up with a conspiracy here. And maybe it's an intentional, oops, I messed up the mic and nobody can hear JP now. I don't know. Not sure. We're gonna wait to see if something comes up for a minute or two here. And if not, we'll of course maybe come back and cover some stuff later. There's 488 of you guys here while we wait for this. if you could do me a quick favor, hit the thumbs up button, subscribe if you're new to my channel. It would be super much appreciated. And yeah, so here's the thing. Producer says Powell should come to A1 trading. Yeah, we're on our stuff over here. I don't want to jinx it, but we got the world's greatest on the producer side. I mean, come on, look at we got the stream theme today. You guys know the producers outdid themselves this month. We got themes coming up for every month following this. Got fun themes for months to come, which is so fun. It's a mafia meeting. Yeah, maybe it's meant to be private. Who knows? Yeah, wild to see it, guys. But we'll wait and see if there's anything there. Look at this, guys. Silver down 4.24%. The industrial metal, of course, largely in part a metal in demand for batteries, solar panels, planes, trains, cars, and automobiles. All sorts of stuff relies on silver. So to see it down this much is a little concerning, perhaps like indicating recession fears, etc. Yeah. 12,000 people are watching the stream. How do they not know? Yeah, I don't know. Nick, there's no U.S. flag behind Powell. Is there always a U.S. flag? I have noticed there is always a flag, but I think he's in a different spot than usual. He's roundtable discussion with workers, although they should put a flag behind him. It looks cool. Anyways, guys, no update there. Seems like it might be a little bit of a wash here to try and stick around and wait for that. What we will do is we'll continue to monitor the situation and share analysis throughout the day. Let me take this opportunity. We will continue to hunt down and see if we can find out information about the stream and get any updates we can from JP. But if you guys would like to join our Discord channel, let me make an announcement here. If you guys aren't already inside of our Discord channel, there is a free version available. And right now, if you join, there's a free chance to win a gold VIP membership with us, which is basically our unlimited membership. You get to stay with us for no cost forever. You get to see all the trade alerts, educational portal stuff, our coaching webinars, our private strategy guides library. So if any of that sounds useful to you, come join our Discord channel. Click this link. It's free to join. All you got to do is fill out that form. Let us know who you are so we don't have a bunch of random spammers or bots in there. So please just click that link, join the Discord for a chance to win the gold VIP membership that we're giving away. So click there, join, and maybe we'll see some of you guys in the Discord. Final thing I will say is if you would like a copy, we went through the EDGEFINDER pretty extensively today. If you stuck around here to the very end, there's some copies that we want to hand out for super discounted rates to stream viewers only. If you're somebody here with us who wants a copy of the EDGEFINDER, especially if you're like a regular viewer, get a copy. It is going to be on discount. If you click this link in the chat right now, it'll take you to the link that I'm looking at. This is our live chat link. If you click this, you'll be speaking with a real person on my staff who is trained in how to use our software and explain how the algorithm works and how all this stuff behind the scenes works. If you'd like a copy of the tool for a stream discount, is kind of a low-key thing. We'll give you extra discounts. If you let us know that you're from the stream, click this link and ask about the discounts that we can give you as a stream viewer. We'll help you out. Thank you very much, guys, for watching today's show. We'll continue to cover stuff inside of our Discord channel about the JP meeting. Sorry that we had that, I guess, technical difficulties from CNBC's side, and hopefully that guy keeps his job. That's a pretty big fumble. Anyways, see you guys next time. Thanks for coming on.
And that concludes today's show. Our goal at A1 Trading is to give you the latest market coverage through our daily videos and articles. If you like what you see, make sure to subscribe for more. Be sure to join our Telegram, where we host trading competitions, share free market analysis with trade setups, and have exclusive discounts to our products. Our Telegram is free to join. The link is in the description. See you all next time.